Welcome back. Well, one of the blockbuster listings today is Mobikwik. It saw a strong debut, listed at a 58% premium in comparison to its issue price. To help us out with what's the way ahead, we're joined by Ms. Upasana Taku, the Executive Director, Chairperson of the company. Hi, good morning, Upasana. Thanks a lot for joining in. First of all, congratulations. You and your team will be pleased because the stock market has given you a thumbs up. They believe there's going to be better times for them going ahead. So you're the best person to help us out with that. Fill us in with a few details. Most financial institutions, they are coming out with their own apps. Most lenders as well are coming out with their own digital platforms. So there is a bit of a fear with regard to competition and your existence. In that sort of a backdrop, how do you expect growth to shape up in the coming years? Please go ahead.
So I think the audio is not very clear, but I think you are asking me that how do I expect to see growth in the next few years? Am I right?
That's correct. And I'm also in that sort of a backdrop where every lender is coming out with their own applications, with their own digital platforms. So there is a fear with regard to your existence. So, if you could comment on that first of all, and then you could tell us what is the growth trajectory. For now, the stock market believes there are good times ahead, and that's reflected in your stock price. Please go ahead.
Yeah, hi. So I think this has been a fabulous, morning for us. We've been working towards this for the last 15 years with a lot of conviction. I'm very happy to be sitting here today and talking to you. The faith and the trust that the 161 million Indians have put into Mobikwik, is something we can see today in the listing of the company. I can tell you that there have been a lot of detractors the last several years. But it's really humbling, and it's absolutely a pleasure to see the way investors have come into this IPO. I think it bodes well for the fact that Mobikwik is now the largest wallet in India, and in the last financial year, Mobikwik has grown 59% on the top line, both in terms of our payments business as well as distribution of financial products. We've also turned profitable in FY24. I think we want to build the company just we have been building the last 15 years with honesty, with innovation, with frugality, and with the intention of creating amazing shareholder value. I think we will not try to grow extremely fast. We will not try to grow extremely slow. The pace at which we've been growing the last few years, which is roughly 50 to 59%, that is the kind of growth we are working towards. And our aim is to always work in a frugal manner so that the company is able to show positive results, both at the bottom line as well as at the top line.
So let's talk about that itself, Upasana. Congratulations on the strong listing, but now that you've listed, the responsibility increases as well. You've grown at around 58, 59 odd % in the past. What clip can you continue this growth rate at on the top line and on the bottom line? After many years, it was in FY24 where you became PBT profitable and net profit positive as well. What are the kind of operating leverages that you have? What kind of margins and net profits can we see you report going forward?
So, we have a lot of growth drivers in our foundation business, which is the digital payments business, which is what we have been operating for the last 15 years. So, whether it is wallet in e-commerce, whether it is wallet on QR codes, and whether it is our innovative new product, Pocket UPI, which is pay with your wallet on all the UPI QRs in India. All of these are growing fantastically, and we expect to get a good growth from there. Even on the merchant side, now we are going deeper into tier 2, where we are deploying, acquiring new merchants. Just in the June quarter, we acquired 2 lakh new merchants. And then we are giving sound boxes and EDC machines to them. And then we are also giving them merchant loans. So the proliferation of payments continues to be the main business of the company, for which we acquire users and merchants. And we have at least 3-4 different growth drivers just in the core payments business. In addition to that, given that we have a full KYC base on a large user base of 160 million users, roughly 60 to 70 million of our consumers are full KYC'd. And on the merchant side also, we have 4.3 million KYC'd merchants. So our distribution of financial products, be it insurance products, be it saving or investment products, or be it credit products, they will be the cream on top of the core payments business. And that is sort of how we expect to continue growing in the manner we have been demonstrating in the last few years.
So just to follow up on that, you said, the leverage that you have on the data that you have of your customers will get you into selling other products as well. If you could give us a sense of, say, 1-2 years from now, how big will your core business be and how big will your value-added services, all the other financial products that you're selling would be, and what does that do to your overall margins?
I'm sorry, you'll have to repeat your question because the voice is coming very choppy. So if you can say it in one continuum, it will be helpful.
We were trying to say that in a continuum. What we're trying to say is that, over the next 1 year or two, what would your revenue mix look like from core products and the new financial products that you have, and what would that do to your margins?
No, see, the way it works is that we have shown in our numbers that are available in our prospectus that we make money both in our payments business and in our distribution of financial product business. Now, of course, in payments, we make roughly 20% contribution margin. And in the distribution of financial products, that number is 40%, which is why the blended contribution of margin of the company is 30%. Now, another way to look at it is that the reason payments is globally a lower margin business, number one. Number two, we are already booking all the cost of user acquisition, merchant acquisition, in the consumer payments business itself. So when it comes to distribution of any financial product, there is no more CAC or customer acquisition cost to be paid. And the operational cost is very low. And so any revenue we make in distribution of financial products directly flows to the bottom line. So while it continues to be the case that payments is a lower margin business and distribution of financial products is a higher margin business, but on a blended basis, the company expects that it will be doing a 30% type of contribution margin long term. And below that, we only have fixed costs. Fixed costs are coming off. As you can see in the last 3-4 years, they've been coming down drastically. And that's where the operating leverage kicks in. And the company has been able to demonstrate 4.3% EBITDA margin in FY24. And that will only continue to expand in the next few years as the costs will be in control, but the revenue keeps ramping up.
Thanks, Upasana, for joining in. Wishing you and your team a good day ahead. It's been a good start to the trading session. We're going to hold you at some of these numbers. I think for the day, you go enjoy it. And we look forward to chatting up with you on your quarterly numbers as well. We'll hold you to some of them. For the time being, though, let's slip into a short break. On the other side, we'll be joined by the other management that we promised you, that of Vishal Megaman. Stay with us.